Hello, you're watching Economic Lifelines Nigeria. I'm Wole Famirewa. Our show tells you the story of how authorities in Nigeria are providing a helping hand to key sectors of the economy. This is Keystone Bank. It's one of three banking institutions formed in August 2011 as part of a rather unique transaction to rescue three banks that were on the brink of collapse. At the height of Nigeria's banking crisis at the time, 8 banks were massively undercapitalized as a result of bad loans or losses that they had incurred from bad loans. But as a key date, a central bank deadline for banks to recapitalize drew closer, it became clear that 3 institutions were struggling to find suitable partners. All right, so today you will hear the story of what was at stake in August 2011. And like many put it, the authorities in Nigeria pulled the trigger on Bank PHB, Spring Bank, and AfriBank and established Main Street, Enterprise, and Keystone Banks. We'll also tell you the story of the role that the Asset Management Corporation of Nigeria played in keeping these institutions in business. It's a story that will be remembered for decades. Poor risk management and weak corporate governance in Nigeria's banking sector were exposed at the height of the global financial crisis in 2008. Most banks lost billions of dollars in bad loans, but some were worse hit than others. This led to the central bank's intervention in 8 troubled banks.
At that time, the intervention included some loans. It included a guarantee of the interbank deposits, a guarantee of the deposits, and a guarantee of some liabilities of those institutions. It was on the basis of those central bank guarantees that those banks survived. And CBN gave them a timetable to recapitalize. I believe it was 2 years, which will have been, I think, sometime in June 2011.
Our preference was always to allow the boards to negotiate, and we patiently gave the banks a lot of time, allowed the boards the flexibility to negotiate, to reach some agreement, and then AMCON was to come in, recapitalize the banks and support the process. But AMCON would only step in with capital where there was a deal on the table.
However, as prospective investors scrutinized the financial conditions of many of the weak banks, it became obvious that some institutions were more challenged than previously thought. This led to a few investors reconsidering the merits of owning shares in many of these institutions.
For example, there were 13 people that were interested in acquiring Intercontinental Bank. At the end, after due diligence, only one person was left, Access Bank. And Access Bank did Nigeria a big favor by acquiring a really large but very troubled institution. So as this due diligence went on and on, people were given till June 2011 to recapitalize. Well known, because the guarantee that CBN had given to these banks could not go on forever.
To be quite honest with you, when the whole intervention took place, the expectation was that the whole process, from rescue to recapitalization or some kind of M&A type transactions, the timeline expected was 9 months. We were already well beyond that. And both from a point of view of confidence within the economy as well as investors in the banking sector from a capital markets point of view, the constant concern was resolution of the crisis. There's no merit in having an ongoing, everlasting banking crisis.
You see, markets work based on confidence. The reason Europe hasn't gotten out of its crisis is because of so much uncertainty. Okay, shifting goalposts, too little, too late. If you want to fix a crisis, you take a decision and you stick to that decision. And you let everybody understand that when you say that this is a deadline, it is a deadline. When you say you're going to recapitalize, you're going to recapitalize. We started this on that note. We stepped in and said, listen, we've taken over these banks. We are aware of the enormity of the problems, but we also believe that we have the capacity to manage that problem. Now, the market remains with you, so long as they're convinced that you stick to your words. Now, if September becomes December and December becomes March, nobody believes that you're serious about it. So when we said you have until September 30 to be out of this, okay, and that's more than enough time. If you can't solve it, we will solve it for you. We meant December 30. And I mean, they did their best. It's not their fault. But at the end of the day, the system is more important than any individual.
But despite the urgency for Nigerian authorities to resolve the banking crisis, the process in 2011 to find new investors was a lot slower than regulators had hoped.
When April approached, it was clear that these banks needed more time. So CBN extended the time to September 2011 and made that a drop-dead date. The banks were trying to recapitalize, and around June, July 2011, it became clear that three banks had not made any progress towards recapitalizing.
The banks were AfriBank, Spring Bank, and Bank PHB. They were collectively very significant institutions in Nigeria's banking sector. For various reasons, all three institutions were unable to offer an acceptable recapitalization plan to the central bank.
That in the case of AfriBank was that we did have advisors who basically ranked the parties that had expressed an interest, and there was a very clear case of a Nigerian bank that was ranked number one in terms of its capacity to basically take over the bank and manage the bank, and there was a private investor, and we had some questions about some of the parties in the consortium, and we did tell the directors of the bank that we were willing to allow them to proceed with the bank, and we had reservations about that particular investor at that point in time, not the individual who put the funds together, but some of the parties that appeared in the equity stake. And perhaps if there was another 1 year, there would have been time to drop some parties and bring in other parties, but we didn't have that time. Remember that for me, what was important was to draw a line under this crisis, and we don't have the luxury of time. And the longer it lasted, the more likely it was that it would be more expensive, and the slower the recovery from the crisis would be.
In the case of Bank PHB and Spring Bank had a different problem. There were issues, legacy issues from the merger of all the banks that made up Spring Bank, and the shareholders had never quite agreed on anything. Who owned what? So it was clear that they were not going to meet the deadline. Bank PHB had an issue with its, at the time, largest holder, I think it was Habib Bank of Pakistan, with issues of bringing capital exportation. But it was clear that these three banks could not meet the September 30 deadline. And anybody that knows about banks recapitalization, you can know 3 months in advance if somebody will be able to recapitalize at a certain date. So by June, July, it was quite clear that these three banks could not meet the capitalization deadline.
Faced with the dilemma of three banks on the verge of collapse, the central bank and the Nigerian Deposit Insurance Corporation had to move quickly to find a way to preserve bank deposits and the continuity of banking services.
Well, at the time, given the confidence or lack of confidence that prevailed at the time, and given risks, like I said, to depositors, to stability and continuity of the system, we found it expedient to come up with the bridge bank mechanism, which is a well-known and tested framework for resolution of crisis. You know, there are many steps you can take, but the bridge bank option, which ensured continuity of banking services and safeguarded the deposits, billions of depositors' funds, and also ensured the preservation of jobs, directly and indirectly, was found to be the most appropriate and cost-effective resolution mechanism. Having come to the conclusion that the shareholders of those three banks, were unable to recapitalize them, and that the banks were not able to continue to render services and to meet their obligations, except of course for the life support that they were on. You know, it was obvious that they had failed, and consistent with the provision of our law, we had to step in to take charge. And having done that, we formed, you know, new entities, which became the bridge banks, and in the process, the deposit liabilities and some other assets of the erstwhile banks were transferred to the new banks. And obviously, having transferred the, you know, the liabilities, deposit liabilities, and some assets of the erstwhile banks to these new banks, the erstwhile banks ceased to be banks, and their licenses were revoked by the central bank, and a new banking license was granted to these three new bridge banks. Now, having crossed that bridge, if you like, we now found a willing buyer, an able buyer, which happened to be AMCON, and AMCON therefore stepped in and subscribed, you know, to the shares of these new banks, injected a lot of funds, as we are aware, so as to shore up the capital of the three banks to a minimum, you know, statutorily required level.
Three banks are now fully owned by AMCON, and after the break we find out how Nigeria's bad bank has assisted in turning around these institutions.